No, I think, Cheryl, first of all, good morning. My sense is that, this stock was issued in the IPO at 32 rupees. It's already multiplied three times. So I think definitely now, it's become little pricey and expensive. So I would not be in a hurry to buy the stock now. Although, the managing director recently commented that they would soon become a Navratna enterprise. So that is definitely good news. And within the green energy and the renewable pack, IREDA has got a special kind of positioning. So there's no doubt that the next 2 to 3 years are going to be very strong and encouraging. But I think whenever investors buy the stocks at the peak and typically on circuit, I think it definitely boils down to the fact that the margin of safety is completely lacking. So I would believe that although the circuit now is 10%, earlier it was 20%, I would still believe that it's better to wait for a mild correction and probably enter the stock at lower levels rather than entering the stock at these levels. Although I do believe that the next 2 to 3 years for the company could be encouraging. So I think investors who have already stock can hold on, but fresh buying should be avoided. See, within the poultry space, Venky's is a market leader, and I think they have consciously, even branded their products. So I think keeping a slightly medium to long term view, I think definitely the investor can hold. My sense is that post COVID things have improved dramatically, and I think their B2C business is also picking up pretty well. So I think over the next 12 to 15 months, if the investor can hold on, definitely I think you could expect better numbers from the company. They have a large domestic market exposure, and the market has been growing by almost 15 20% every year. So for a market leader like Venky's, it's obvious that they should also grow with the market and probably do better than the market growth. So hold on for the next 12 to 15 months. Definitely a decent risk reward can be expected. Yeah, I think this is a commodity stock which manufactures lab, which is largely used in soda ash and basically in the detergent sector. My sense is that 3 years is a very long period for a commodity stock. Although the price is attractive, my sense is that if the investor has a 12 to 15 month horizon, then definitely one can look at it. Lab prices have been moving up steadily, and I think looking at the kind of growth in the detergent as well as the soda ash sector, I think in terms of the domestic market positioning, the company is quite well placed. This is a SPIC group company and has been doing pretty well over the last, say, 2 to 3 years. So I think from a 12 to 15 month horizon, one can take a call. Thereafter, one has to review because it's a pure commodity and any sharp drop in the commodity price could obviously impact their margins. So at best, I think 12 to 15 months is a good time frame where the investor can look at investing. I think Kirloskar Ferrous Shesti, he can hold on. Although the stock has underperformed in the recent times, what is interesting is they have taken over, the assets of ISMT, which was basically into based, seamless tubes, and which obviously would lead to a lot of value addition, in the market for them. They're already a leading producer of castings for the tractor as well as for the heavy earth moving segment. This product addition would actually help them get into a lot of automobile, passenger car companies, typically for the bearing requirement. So I think, over the next, say, 12 to 18 months, once the merger, gets completely digested, we could see better numbers once the consolidation, impact happens. So I think one should be better holding on here. Good growth prospects could be expected over the next, say, 12 to 18 months. I think Pilani Investment is the Birla holding company for all the stocks the promoters hold. It's a very illiquid stock, and I think the stock does not have any large institutional or any HNI investors. So typically in these kind of companies, the liquidity is on the lower side. But if he has shares earlier, I would suggest he can hold on. He can wait for a mild correction, but typically, Srishti, in such kind of companies, one has to understand that the entire investment value of such companies is always taken at a 25 to 30% discount when you value such companies. So I would believe that the longer term prospects are definitely fine, but in terms of the risk reward, the stock has already run up quite significantly. So I think you can hold on. Fresh buying can be done, maybe when the stock corrects and probably the stock is available at lower levels. The better way would be to just buy and forget for the next 2 to 3 years, because typically, as everyone is aware, Tata companies never come to the market again. I mean, a classic example is TCS, which made its initial public offer in 17 years back, and after that there has been no dilution in terms of rights or preferential issues. So I think a lot of wealth can get created even from these. I think what is required is little more time and conviction. So if she doesn't require money as of now, I think it's better to hold on for the next 2 to 3 years. a very large and significant wealth creation journey could be possible, in the next say 2 to 3 years. I think we've seen very strong numbers from Yatharth hospitals, and I think hospitals are a very strong flavored segment in the market as of now. Our sense is that they operate in specialities as well as they have a large kind of operating leverage available because the capacity has just recently expanded. So I would believe that the next say 2 years, I think if the investor can hold on, he could not only recover his cost, but he could definitely hope to make a decent risk reward. So would advise him to hold on as of now. Has been one of our earlier, mid cap picks, which we have recommended to our clients. In fact, this company is into shipping, logistics, as well as coal tar, which basically is a combination of infrastructure and other, ancillary services. The company has been doing extremely well, and in fact, we have seen very solid earnings growth for the last 2 to 3 years. Our sense is that even FY24 and FY25 should be a lot better because considering the kind of growth in infrastructure, shipping services have also picked up. In fact, this is one company which has funded most of its growth largely from its internal accruals and very little dependence on debt. In fact, to tell you, very marquee investors like Ashish Kacholia also holds a stake here. So I would be, if the investor has a 12 to 18 month horizon, he should hang on. Maybe he could book out some profits and take out his initial capital. But the next 12 to 18 months should be equally strong, and we expect a target price of around 1,050, 1,100 over the next say 12 to 15 months.